What's going on, guys? So we're going to take a little look at Facebook. In this video, I'm not going to be talking so much about levels to kind of day trade, but maybe you're a little bit more of a longer term investor and you're looking for a good buy. Generally speaking, in a bear market, there's always a tremendous amount of pain that goes on. There's a lot of emotional sellers that are kind of just get me out of my positions, get me out of this. I just want to go all cash. One thing that I do kind of want to point out, I think we're kind of in that middle stage of this bear market. I do think that there is still one more wave down. Now, typically in any sort of major correction, major bear market, you normally get three legs down to the correction. Currently, this is the second leg. So if we kind of just look at that, coming off highs on Facebook of 384, we had our first significant drop here, followed by consolidation, followed by our second leg here, and then a little bit of consolidation. And mind you, this is the monthly chart. So if we just kind of think, we just kind of look at this picture here. I know a lot of you guys know that 2022 has been, pretty bad, but majority, like the last couple of weeks, I'm seeing a lot more people, start to feel the pain. And it's, the reason why that pain level is starting to pick up, the last few days, the last month, so to speak, is just because with the price dropping, it's now starting to get into some of the people that have been invested here for quite some time. Now that pain level has started to be triggered. But with that being taken into account, one leg down, two legs down, three legs down, I think this next leg down could take us into the 130s on Facebook. Now, mind you, I understand that that's about 50 points away on Facebook. Does not have to get there, and I'm not saying that it's a for sure landing spot, but if we just kind of look at the two previous corrections that we've had on Facebook, going back to 2018 and that 2020 COVID crash, we came down to the 50-day moving average on the monthly time frame. We came down to the 50-day moving average on the monthly time frame. Yes, we did quickly lose that level, but it was sucked back up, and then we went on a raging tear of a bull market here. So with this kind of kind of bringing into example now, we've lost this 50-day moving average on the monthly time frame, and when the next month we reclaimed it on these two other separate scenarios, we failed to reclaim it, and then we were rejected, and now we are on the third leg down. So that's what's telling me a little bit more that maybe we could be coming into that third, middle back half of this kind of correction here. So I want to give you guys a couple of spots where potentially, if you're looking to, kind of nibble in and start to buy this pain level up, I think that a lot of people who really position themselves in cash and day trade and scalp their ways to profits now, and then kind of have that dry powder to buy in on some of these stocks later, are going to really benefit when we do come out of this in the next 2, 3, 4, 5 years. With that being said, there's a nibble spot that you can kind of get into Facebook right around that 172.50. Maybe I would take a starter position there. Now, mind you, we could hold, right? We could hold the 100 EMA on the monthly time frame, but I'm really looking for the 100 simple. I would like to get back down here into the 172s. I think this would be a good starter position here. Now, keep in mind, you are buying into a bear market and you are buying into pain. So that does not mean this is an end all be all. Like, if you just buy here at 170, that it's going to just, reverse and you're going to have the most perfect entry. No, no, no. This can completely come through 171. You're going to be able to need to endure that pain. You will have a little bit of more support, somewhere in the 150s. And then your next big spot is going to be the 200 EMA. So that 200 EMA is sitting right around that $133 level. I would say your prime optimal position to try to start loading would be anywhere between 130 and maybe like 150. I think that's going to be a potential good buying opportunity for the future. Now, if things got even more dicey and more hairy and this starts to lose 130, look out. Okay. I really don't have any more support on the monthly time frame if we do start to crack below 130 on Facebook. So you might want to use this as a hard level stop here and then kind of see what develops in the overall economy and the stock market from there. So definitely between 130 and 150, good potential loading zone to try to ride this wave out for the next 2 to 3 years. I don't think this is going to be a V-shaped recovery like we had here in Roni Roan when we kind of just had this, 3 week decline, or this, 2 month decline here, from top to the bottom, and then just a massive rally. This is like a big major V-shaped recovery with, looks almost like a check mark, right? Here I think it could be a little bit slower, drawn out process that's going to take at least 1, 2, 3 years to try to get back to something like this. I'd be very, very shocked and surprised if we had, a V-shaped recovery. But just trying to give you guys some, insider points here on where you guys could potentially take advantage of, and where Facebook can potentially go to. 172 would be the next stop if 180s does not hold. Now, mind you, if 180s holds and we do bounce back into the 200s, low 200s, between 200 and 220, that is a rejection spot where there is supply. Look for the fade, and then the comeback down to 172. Hope this video helps, guys. Make sure to subscribe to the YouTube channel. Also, join the Discord. That link is down in the description box below, and I will see you guys on the next one.